What's up, everyone? Thanks for tuning into the Crypto Commission podcast. Today's guest is Nik Patel, author of the Altcoin Trader's Handbook. Awesome conversation here. I hope you guys are ready to learn because we sure did. This was great. We are so appreciative of Nik making the time for us and just teaching us his ways. This guy is a wealth of information. So we hope you all enjoy. You can find us on iTunes at the Crypto Commission podcast. Leave us a 5-star rating and a comment. Help us get the message out there. And also on Twitter, you can follow us at Let's Talk Coin. Come engage with us there. We've just launched our Telegram channel. There you can find us. It's t.me/crypto_commission. And also, we have just launched a Discord. So we'll put the link for that in our Twitter so you can join there and engage with us there. We're really looking to build some quality relationships at a deeper level through there, talking trades, talking TA and FA, and just getting to know what the community is doing and all of us helping each other move forward in this space. So anyways, guys, let's get it going. Episode 7 of the Crypto Commission podcast with special guest, Nik Patel.
Welcome to the Crypto Commission podcast. Here are your hosts, Lambo Leo and the Bitcoin Broski.
Hey everyone, and welcome to the Crypto Commission podcast. Today we are joined by none other than Nik Patel. And we're excited to have Nik on the show. It's going to be a good time. I am your co-host, the Bitcoin Broski, here with my co-host, Lambo Leo. Say what's up, man.
What's going on, guys?
So, Nik, how you doing, man?
I'm good. Thank you for having me on.
Hey, thanks for coming on. You know, we're excited to have you. As I'd mentioned a moment ago, Leo and I have really learned a lot from your book. So we're excited to hopefully share that with the people listening.
That's always good.
There you go, man. So how did that foray into writing start? What was it that led you to want to write a book?
So when I was younger, I had two main aspirations. One was I wanted to be a marine biologist, and I sucked at biology, so that was never ever going to happen. And the other thing, which I was good at, luckily, was writing. So I was always interested in English literature, and that was the class I then took on to university where I got a degree in. From there, I've just been fascinated by writing in general, by reading, all of that sort of stuff. And it just seemed like a natural progression to take something that I was doing as a job and that I was also passionate about and combine the two.
Awesome. And how did your journey into crypto start? I understand your dad. Did your dad have a trading background?
Yeah, well, he was a sort of equities and all the serious stuff. He was into the commodities and stuff like that. But I kind of separated myself away from it, and I never really took advantage of having someone well versed in financial markets. And it's probably a mistake to neglect that, but I think I learned through my own mistakes because of it. But yeah, he was doing. I mean, he'd been doing it for about 10 years at the time, or 8 years, or something like that. But I just happened upon the Dogecoin subreddit on the internet as I was just having a browse, and that's how I kind of got sucked into the space.
So jumping into the Dogecoin subreddit, how did that evolve into? I mean, basically the breadth of knowledge that you have now. What did that progression look like for you?
Yeah, so when I found the subreddit, I had no idea what Bitcoin was. So I had no preconceptions of cryptocurrencies. It was a completely alien concept to me. So just coming across this web page devoted to a digital currency that's centered on sort of anime dogs was the weirdest thing. And I was never into anything like that when I was a teenager. So it wasn't even like, oh, this looks cool, I'm drawn in by it. It was more like, this is bizarre, what is it? But the community was really open in sort of getting new people to understand what they were about, and I think that was the major draw. And then a couple of weeks later, after having questions answered about Dogecoin, I was then starting to be given sort of tips online where you would get, 1,000 Dogecoin, which would be worth, less than a penny. But it's just crazy. I thought it was crazy at the time that someone on the internet could randomly give me money and it wasn't fiat. Yeah. So I was like, wait, how is this working? So I then downloaded the Dogecoin wallet for my PC, and I was like, right, this is super weird. And I just had no idea what I was doing. And eventually it got to the point where I was like, right, I just need to Google what all of this is and figure it out. And as the new year turned, in sort of 2014, it would have been, because I found the Dogecoin Reddit in December 2013. So the new year turned, and I started getting more interested in it. And that's when I came across Bitcoin. I was like, right, so this is what everything sort of revolves around. And it wasn't then until February that I decided, oh, this is something I can make money in if I get good at it. Or, as it turned out, you didn't even need to get good at it to make money at that point.
So we like to see the progression of how people transform, from the beginning of their investing and trading, and to see improvements that they've made from that first initial buy at Dogecoin. How'd you kind of maneuver and figure out, what you were doing, basically? Because I mean, at that point, you obviously didn't know much about the space, right? So
no, I had no idea about fundamentals of the space. I had no idea about the tech. I had no idea about charts and technical analysis. So I was starting from zero on all three fronts. And sort of it was kind of just trial and error to begin with. And also when I started my Twitter account in early March or late February 2014, I found a bunch of other people who were involved in the space, and I was kind of just imitating them and looking at what they were doing. And they say this is a good buy, let me buy it.
Who were your favorites back then? Were they the same guys that are pretty big?
The same guys. It's all the same guys. So I've been speaking to Sicarius, Noose,
Nitacoin,
Crypto Cobain, Not So Fast. All of these people, Angelo, all of these people were involved from back in those days. And they were sort of the figureheads even at that time when I was completely new. So I was kind of just imitating what they were doing and forming some sort of dialogue with them where I would find out what their thought process is. But to be honest, to begin with, it was more what lights are flashing on the screen, especially on MintPal, which is such a visually attractive exchange. I was looking and going, right, okay, this is flashing green. That looks cool. I'm going to buy that.
What exchange was that? Did you say MintPal?
MintPal. Yeah, that was the original sort of big crypto exchange, because we had other exchanges before it. There was Crypto Rush, Cryptsy, all of these exchanges which are now defunct and ended up in scams. But MintPal was the main exchange at the time, and where most of 2014's mega pumps were at, in the same way that Bittrex and Binance and Polo occupied that space in 2017. MintPal was the sole sort of destination for volume at the time, and it was just really visually attractive. So and very easy to use. So I would sort of get blinded by the green and red flashing lights on there. And I detail in my book, the first coin that I bought was Maza coin. And I bought it right at the top.
It's got staying power.
Yeah, and I held it down. I think it was like 70%, and I'd gone in with all of my capital pretty much. So I began with, I had to get a 3x just to get back to where I was. So yeah, it started off well.
Can you, so that mindset, I think that there's a lot of people that, I mean, by now, a lot of people view HODL as a meme almost, but can you explain the mindset of when you're going down, when the coin is dropping, you're at a 30, 40, 50% loss. What is your mindset? How does that shift when you see a coin start to bleed?
I think the mindset is different at different stages of your trading career. So now holding on to a position for 50, 60%, a 50, 60% drop is okay for me because I've calculated that already. And I've, the way I might approach certain trades is with a fixed risk approach where I have, 0.5% of my entire capital goes into this one altcoin, and if it goes to shit, it goes to shit. But the likelihood is, if I've done my fundamental research well, and it's technically sound, then it's probably going to do, you know, a 5 or a 10x, and that 0.5% quickly becomes 2.5 to 5% of your portfolio, which is quite a big win. Whereas back then, you have no idea about what I just said. And when you see it going down 50, 60%, you're like, well, I don't want to take this loss. And I can see all the other coins are going up, so maybe this coin might go back up again. And back then, everything was even more volatile because there was no liquidity whatsoever. And the market caps were like $10,000 for every coin. Yeah, seriously. Like, I think like 80,000 was a large cap coin. And yeah, so it was very, very volatile, and the pumps came swift. So you'd be up and down within 24 hours. And yeah, I just kind of got swept away by that and bought in at the top for those first 2-3 trades, and held all the way down until the point where I was like, well, I need to sell now, otherwise I'll have nothing.
So when it comes to that, I mean, I think the one thing I pulled from that answer more than anything is just risk management, right? Not
Absolutely.
going so heavy into one project, or, you know, having that fanboy status where you'll put 20, 30, 40% of your portfolio into one shitcoin.
Yeah, it's ridiculous, especially when there's such an abundance of opportunity in the space. You know, we've got 1,800 coins on CoinMarketCap, and yeah, probably 1,600 of them suck. But 200 good projects is still 200 good projects. You don't need to pump half your capital into one project because you become a fanboy.
So how do you find the 200?
Through a very, very long filtering process, as I detail in the book. You know, it takes me forever because I start out with so many coins. You know, you have 1,800 on CoinMarketCap, and if I'm filtering by market cap to begin with, and I'm looking for coins between 1 million and 10 million, which is essentially a sort of low to mid cap project, you've still got, you know, nearly 800 coins or nearly 1,000 coins. That's a lot to filter through. And then I'm going, okay, out of these, what about the coin supply? I don't want coin supplies that are, you know, billions and billions, and I don't want coin supplies that are like 7 coins, because it just skews the prices, and then the order book becomes very difficult to read. So
right.
I tend to look in the middle ground. You know, you want maybe 100 million coins is a good amount. So then I'm filtering for that, and I think I whittle it down step by step until I have probably 30 or 40 coins left, and those are the ones that I'll write down in a little journal, and I'll keep track of. And I might not buy all of them, but those are the projects I deem fundamentally sound and technically sound.
So going into that a little bit, you know, some people just base their trades off of looking into fundamental analysis, and some people are the opposite, and they don't like looking into fundamentals at all. How much of each goes into your trading style?
Okay, so when I was in 2014, when I finally started to understand what I was doing a little bit, I still was not really paying attention to fundamentals. It wasn't until 2017 came, and I'd obviously come back off finishing my uni degree, and I was like, right, I want to get involved in the space again. That I realized, oh, okay, these projects are not like the ones back in 2014 or 15. These are very sort of interesting ideas, and, you know, you've got big teams of like 30 developers and stuff like that. So I was like, okay, maybe now I need to start paying more attention to the fundamentals of these projects. And since then, what I've done is pretty much sort of 60-40 on, you know, 60% I'm looking at the chart and 40% I'm looking at fundamentals. So it is quite a significant part of my analysis now. The one thing I'd say is that I will never, ever take a trade solely on fundamental analysis, because if the chart isn't lined up correctly, then it doesn't matter how good your fundamentals are. Price can still come plummeting down. Whereas the flip side of that is I could, you know, hypothetically take a trade on a technically perfect chart without even bothering about its fundamentals, because a lot of those will still pump regardless of fundamentals. It doesn't really work the other way around. You
know, I heard you say that something similar before, and a couple of months ago, I think it was. And that was, I mean, for me, I'm not a professional trader. I'm not an expert in any stretch of the imagination, but hearing you say that, it gave me some perspective, because I've always been a heavy FA guy, mostly out of ignorance and the lack of time to focus on TA. But that really, it shared some perspective to where I was able to start looking at things better, and I've had some moments that were saved because of that. So it's very important, I think, to add that layer to it. You mentioned back in a previous answer order books, and I know that in your book you talk about that being a massive tool in your arsenal. So what does that process look like when you're looking at an order book? How are you gauging whether or not that's going to indicate a trade you want to enter or not?
So more recently, I have been using order books a little bit less, but I don't tend to base an entire trade on them. What I do use them for is monitoring positions I'm already in, and trying to get a feel for what the underlying, market maker, quote unquote, is doing and is setting up. So what I tend to do is monitor, say, if I'm looking at 10 coins and I'm already invested in 5 of them, what I might do is screenshot the order book from day to day at varying times, and then cross compare those and see, okay, where have the big orders moved? Where were they originally? I'm looking for sort of clean orders that feel like sort of robot orders. They're like bot orders that have just been placed in and will be pulled potentially over the course of a week. And really, it's mainly just having some sort of framework for a potential bull cycle. It gives me some sort of skeleton to work with, where I can then incorporate my targets, my sell targets. Because if I'm looking at purely technicals or fundamentals for sell targets, but then the order book is telling me that a lot of the current price action is to push price towards somewhere that's nowhere near my price targets. If I'm looking, let's say, to make it clearer, let's give an example of, I think I use Ubik in the book, so let's just go with that. Let's say I have a technical target of 25,000 Satoshis, but in the order book, most of the large orders are stacked around sort of 18,000 to 20,000. I have a potential of missing my target because I haven't been paying attention to where these orders are stacked in the book. So yeah, I tend to use it for that more than actually entering a trade in the first place.
Gotcha. Okay. So with the market the way that it is now, bloody though it may be, how has your strategy changed? What does that look like now on a day in, day out basis? Are you still looking to enter trades? What's the strategy from here?
Yeah. So my strategy doesn't really change between bull or bear markets, because all I tend to do is become more cautious, more on the line of sort of capital preservation. So I won't be, just buying all sorts of micro caps because I think, oh, this looks fun and looks like it could pump 10x, because it's likely not going to in the near future. So I'm much more wary with my capital, but my strategy doesn't change at all. I'm still looking for the same signs. I'm still monitoring rich lists. I'm still looking at the order books, and I'm still looking for sort of accumulation ranges to form after these long drawn out bear cycles end. In terms of what I'm doing right now with positions I'm already in, I'd already calculated my risk to begin with when I entered those positions. So really, it's just a situation of waiting it out for me. That's pretty much it.
Nice, man. So where do you feel we're headed? What's the market sentiment in your opinion right now?
I think the market sentiment is extremely confused going off the three. Did either of you see the 3 polls I've put up today?
Yep. Yes, I participated.
They were hilarious. I think no one knows anything about anything at the moment, myself included. But what I would say is that it feels to me, I think a lot of it is obviously based on what Bitcoin decides to do. And we're at this point where it could get much, much more ugly very quickly, or we could end up with what is in effect a quadruple bottom. So I think we're kind of hanging on this precipice here, where if we fail to close, the daily or the weekly below 6,000 again for the fourth time. I think we closed once below 5,940 or something like that. Mm-hmm. But if we fail to do it for a fourth time and kind of stay under there, then we're going to get the mother of all bounces. It's just not even questionable. But the flip side of that is that if we do close through there and it's the fourth time of hitting against that support level, it's going to fall very quickly. And there's liquidity under 5,400, which has been sitting there since August 2017, I think. And I've had that sort of double bottom marked out as a potential level, which we might retrace to at some point. And it just seems that, yep, it's inevitable now.
God, that's so exciting. I'm sorry, maybe I'm the only person who's like, I would love to be able to get some corn for that price.
Yeah, no, I agree. And I think, I think a lot of people's estimates, I think on both sides, people at the top were like, oh my God, this is going to 100,000 this run. You're like, shut up, you idiot. And then there's people now going, oh, this is going back below $1,000. You're like, shut up, you idiot. What do these people think? It just doesn't really make sense. I think the deepest we'll go is sort of 3.5 to 4K. I can't really see us going under 4K, to be honest. But I would love to buy some around that level as well.
Seriously.
But in terms of alts, if we do start going that low, I wouldn't be surprised to see further sort of alt bleeding, new all-time lows on lots of coins. But then there will have to be a point where they do stop and they bounce, because if they just keep going to zero, then there's no markets left to be played. And these are very, very profitable markets to play. So there has to be some point where Bitcoin might continue going down, but alts kind of slow in their capitulation. So that's the sort of sign I'm looking for.
Well, and I think a lot of the people that you mentioned at the beginning of this podcast as people that you bounce ideas off of, they went from being traders at the beginning to now massive players in the market.
Yeah.
What are their thoughts? Like, how are they viewing things? Are a lot of them just on crypto retirement? Or are they still playing markets?
I think a lot of them have a very similar mindset to me, wherein, a couple of them are sort of crypto retirement where they're just not really bothered about the market at the moment. But a lot of them are like, this is quite a good opportunity for us to experience, gains like we did in early 2017 and also in, January 2018, January of this year, if you took profits, that is.
Right.
But I think most people are looking at it as an opportunity more than anything else. I don't think anyone that I bounce ideas off with is worried about anything whatsoever. Obviously, there is that, hindsight is 2020, and everyone would have sold everything in January and would be looking to start scaling in over the next couple of months if life were perfect. But that's not the way it works. And most of us, most of the people I've spoken to, myself included, we cashed out enough to make sure that we're okay for the next 2 to 3 years, to wait out whatever bear market may come in January. So I think we're all sort of just waiting it out and sort of anticipating a near reversal. I don't think it's going to be, another 8 months of bear market. I don't think we'll see sort of a 2015 to 16 scenario. Where we're in 2 years of bear market, but I personally feel like it will be over before the end of this year.
I'm with you.
That's just me. I don't think it will last longer than 12 months.
Yeah. Nice. So my next question is a fun one we like to ask, and we obviously seem to get a lot of similar answers in regards to crypto Twitter and things like that, but if you could give us one thing you love about the space and one thing that you hate about the space.
Oh, I think my answers are pretty much the same, but just inverse for both questions. So what I love is the community, and what I hate is the community, because you have the most generous and kind, as I've experienced myself, people in the space who are genuinely coming from a place where they want to help other people who, suffered a shit time or experienced some sort of injury in any way. And then you also get the people, especially now that the space has become so big and it's obviously inevitable, you get just the douchebags who just want to wind people up for no reason. And, each to their own. It's up to them if that's what they want to spend their time doing. But I've definitely felt the space become more bitter and resentful over the past, not even during this bear market, but over the last sort of 18 months, even since sort of August 2017. Yeah, the last year, in fact, August 2017. Since then, it's been sort of a gradual descent into more bitterness than it ever was. And that's obviously a case of it's growing so exponentially that's just going to happen when you get so many people with such contrasting personalities, and despite their the passion that they both share.
In addition to probably Bitcoin going to 20K and back to where it is too.
Yeah.
Right?
Well, yeah, I think that's kind of been the driver as well, where anyone who was a dick has become more of a dick. And anyone who is genuine, a genuine person, seems to have just become more genuine over that course. That's just how I feel about the space. But those are definitely the two things. It's all based on the community, because it's unlike any other. The traditional financial markets don't have a community like this, and I've been trading in them as well. In 2015. So it's just not the same.
But it's just the emotional maturity is there in those markets, and here, and
definitely,
I mean, you mentioned it in the book as well. Everyone isn't cut out to be a trader, and that's because of the emotional intelligence that most people just don't possess. They don't know how to control that, how to maintain that.
Yeah, definitely. And I think with trading specifically, especially short-term trading, it's just a different ball game, and most people don't have enough, like even in their day-to-day lives, they don't have control of their emotions. So how do they think they're going to be emotionally stable when it comes to adding in money?
And potentially life-changing money on top of that.
Potentially life-changing money. So I think, especially in this space, it's definitely better for a newbie to come in, stick with, as I say all the time, stick with money that you can afford to lose, and begin in sort of a position trader, long-term speculator sort of position. You have to be a 3 to 5 year investor, but the longer you have your sort of horizons, the better it's going to be for you, and the less emotional you're going to be.
So let's dig into that a bit, because I know you've laid this out on previous podcasts and the book a little bit, but talk about someone who is new to the market. Let's say I'm brand new. Today's the day, and I've got $1,000 or pounds of fresh powder to put in. What am I doing?
So I think if you're 100% certain that $1,000 or pounds is disposable income, then great. Then you can start with that. I think that's the most important point. Is you have to make sure that it should seem like, oh, I'm just buying a coat. I'm buying a fancy coat. That's all it is. That's what how you should look at that money, because it could go to zero, especially in this market. So it has to seem like it's, I can not throw away, but I can invest that £1,000, and if it doesn't work out, it's going to make no difference to my rent, my living conditions, my family, nothing like that. And that's the most important point to begin with, which 95% of people are going to ignore. And then from that point, I think it's important to gain some sort of foundational knowledge about the space, because that's one thing I didn't have to begin with. I'm still, very illiterate in terms of technology. I find I have to read things multiple times in order to grasp, especially on the sort of security, cryptography, that sort of thing, that still eludes me. I think that's the most important thing to kind of get to grips with to begin with, because it's the foundation of this space. And then from that point, you can make sound investment decisions, because you understand the tech and the market. And I think the next step from there would be to determine, what sort of time horizon you're looking at. Because if you're coming in right at the gate going, oh, I want to be a day trader, 99% chance you're going to lose your money. So I would say the best thing. I think the thing that I've fallen into now and that I find most comfortable is sort of position trading, where you're in for like 1, maybe 2 market cycles, and that's 6 to 12 months for the most part. And I find that's a good happy medium where you're not in it forever, but you're also not in it too short a period that the volatility just kills you. So yeah, I think those are the 3 most important things. And then from there, you're obviously just looking at refining skills in terms of technical and fundamental analysis, which I think comes with experience more than anything else.
Now, assuming that you have that money to lose, it's more of a risk-on approach, if you will. How are you allocating that with regards to large, mid, micro cap coins?
Yeah, so I think this is the point at which many people might have, or many people might take opposition with me.
Go full shitcoin. That's it. Just
100%. Yeah, 100%. Just buy everything, everything under $100,000 market cap. Just put it all into there. No, I think I'm of the mind that if you're secure enough in your personality and your ability to remain disciplined, then that original money, you can be a lot more risk on with it, especially if it's completely disposable income. When you have £1,000 that you're willing to just throw away on volatile markets, like that's basically what it is, then I think that you should go full hog, low caps, micro caps, stuff that's going to very quickly grow your capital. And then as those investments start to grow and your portfolio grows in size, make an equal reduction in your risk level. So just keep reducing risk as your capital grows. And I think that's the best approach. But obviously that can bring in some bad habits. If you start with £1,000 and you start putting in 25% into a low cap, because you're like, well, it's only £250 if I lose it all. But it could be, £25,000 if it goes, whatever, hundreds of percent. So I think that's the sort of caveat is you do have to know yourself in order to realize, am I going to build a bad habit that I then can't break, or am I strong enough emotionally to begin like that and then know that I'll be able to reduce risk as I go on.
Nice. So going into trading a little deeper, what are some of your favorite indicators that you use?
I don't actually use any indicators at all. Actually, that's a lie. I do occasionally look at the 200-day moving average and the 360-day moving average, and it's not that I base anything on it. It's just curiosity. I'm like, okay, so this is what people tend to look at in terms of long-term positions, so I might as well look at it. But no, I don't use any indicators whatsoever. It's purely price and volume that I'm looking at.
So what like horizontal resistances and supports, right?
Yeah, pretty much. It's just I tend to use horizontal support and resistance for the vast majority of my charting. I mean, if you look through my Twitter feed, there's some sort of like more advanced price action concepts like order blocks, which I learned from ICT, and then just other things that are a little bit more advanced that you can find anywhere on the web. But I think the vast majority of my stuff is just finding long-term support and resistance levels, accumulation channels where price has been constricted for a long time. And then also looking at volume to see whether I'm, spotting accumulation or distribution at those levels.
Sure. God, we have a buddy who's going to be so excited to have heard you say that, because he's been singing that for the last 6 months or so to us. And I mean, he's got a very good hit rate when it comes to his trades. So yeah, that'll validate him big time.
It's not that I have anything against indicators, and I used to be very anti-indicator because, I just thought it was just fluff that you didn't need. But it's like anything. Whatever works for someone works for that person. So if your strategy is successful with indicators, then great, continue doing that. But for me, it's just an excess that I don't need on the chart. Everything I need to know is in the price and the volume. And that works for me. So I tend to keep it as simple as possible.
And it can almost be discouraging, I think, for some people that feel
Definitely.
That they're getting told, oh my gosh, I need to learn all these things. I need to learn Fibonacci. And it, for me,
and they look complicated.
Oh my, Absolutely. Yeah. Right. I agree with that. It gets discouraging. And when you can break it down and simplify your strategy, for me personally, it's actually helped. The less things I look for and just keep it simple, the more success I've had.
Definitely. Simple is always the most effective. And I think, despite the fact that most indicators aren't complicated, the way they're visualized on a chart makes them look complicated to someone who is inexperienced. And I just think it's not necessary for that person to go in thinking, shit, I'm never going to learn all of this stuff.
Yeah, we had a private conversation the other day, and someone had posted a chart that I'd pulled off, and it almost looked like a visual that someone would look at when they were tripping. So there's just
crazy.
So many different colors and patterns going on everywhere.
People go in with their charts on, oh my God, on Twitter. Some of the people who have like 7 indicators and they've got every single color from the rainbow. It's crazy. I'm like, what are you seeing there?
That's crazy, man. So, all right. So that's the TA side of things. When it comes to just the FA on the micro caps, where are you looking for these projects? Where are you getting these projects, picking them up as far as exchanges? And obviously it's a 0.5% or so of your portfolio that's going into each one.
Yeah. So the fundamental tends to begin with some form of coin screener website. Like CoinMarketCap is obviously the biggest one, but also there's BitScreener, there's CoinLib, there's loads of websites that you can use depending on which take your fancy or your preference. And I tend to use CoinMarketCap for the most part. And then once I've kind of whittled those down by the parameters I was talking about earlier, in terms of actually analyzing them, the first point of reference for me is Bitcoin Talk Threads, because it has all the information I need to know regarding, well, you get a good sense of community on there because you have pages of history which you can read through and conversation and dialogue. Then you have information usually on the actual first page of the announcement on the coin supply, all of the different metrics for that, total, max, current. You have the block reward schedule, so you can figure out the inflation rate and the supply emission rate, which is very important for my trades. I don't want to start the marathon, 20 miles behind everyone else. So I tend to look at coins most of the time that have very low inflation rates, unless they're brand new, in which case obviously it's very difficult to find one that's not going to inflate rapidly. But if it's been around for 6 months or longer, inflation rate or supply emission rate tends to be quite a significant component of my analysis. And then I'm also looking at block explorers, because I'm trying to monitor the rich list for accumulation or distribution. So I'm looking at the top holders and their activity and monitoring that over, a week or two and seeing how that changes over that time. And then I'm also looking at, in terms of the actual project itself, what I'm looking at is do the developers hit their deadlines, because I think that's quite important. And are the community active around the project? Are they willing to help? Do they seem dedicated? Because if that developer leaves, are they willing to then take that step and take over the project and bring someone else in from the community? Because what you don't want is a project to be doing so great and then the developer leaves, but there's no strong community around it and it just all falls to pieces.
So that all being said, are there any microcap coins that you would care to mention that are some favorites, or maybe not microcap, since that might have some influence on price action? But what are you looking at right now? What are some of the projects that you like?
I like, it's not really a microcap, it's probably more of a low cap right now. But I like co-vesting, and weirdly enough, it was an ICO. I don't really invest in ICOs ever. I've only ever invested in 2 or 3. One of which was Mothership, which I'm still in, and also then co-vesting.
Just to jump in real quick, why do you avoid ICOs?
I think they have extra baggage that I'm not willing to contend with. Gotcha. You start from but as I say, there's an abundance of opportunities in the space, and it just doesn't make sense to me to have to deal with all the extra shit that ICOs have.
Sure.
Yeah. So, but one project I'm really bullish on is co-vesting, which is basically just a social trading platform. But their team seems very, very dedicated, and their CEO is on the ball all the time, talking to the community. There's like a big community that's formed around it. So I'm happy with that at the moment, and I think that's probably trading around $10 million market cap, whatever that is in BTC. And then on the other end, the much lower end, I like BitCloud, which is a masternode. It's a very simple masternode and staking project that there's not really much special about it in any way, but they have a dev team that's working on things, and it's down to I think it's like an $800,000 market cap, and the BTC price is down to like 300 satoshis from like 5,000. So I've been buying under 1,000. So obviously, if I'm buying at 1,000, you're like 70% down, but it doesn't really matter because it's still 0.5% of the portfolio. So but at these prices, I'm thinking it's quite a decent project. The team's working well on it, and it's got a community, so why not take a stab at that?
Just to ask, because you mentioned buying under 1,000 satoshis, with that 0.5%, how are you laddering in?
It depends on the order book. That's one thing that's dependent on the order book. If I see a big sort of sell wall that's up, then I'm like, oh, I can take a bite out of that. Then I'll just market buy at that price. Or if it's a very thin book and I'd have to push the price up in order to get the position filled, then I'm micro buying small amounts every day for weeks in order to build the position, or I'm setting orders lower in the order book in order to wait for those to get filled. I think it's just a combination of all three depending on the project.
Interesting.
Yeah, and right now, would you say is your strategy the same for buying into things like master nodes? Because I know right now it looks like there's some remarkable prices on some master nodes that some people had bought in for.
I think it's like the best time to start scaling into stuff like that. Only if they're fundamentally sound projects. Obviously, you don't want to buy a master node that then just dies off entirely.
Of course.
But, you've got even. Right, Dash, one of the biggest masternode coin, I think its masternode is down in price like 80%.
It is, yeah.
So if you've got 27 BTC to spend on a masternode, might be a decent place to start. But yeah, I think there's a lot of opportunity in that sort of environment. Yeah, I think another one is Alco, ALQO. That's got a very active developer team. I think they fucked up with something, and the price kind of crashed after my entry. I was like, oh yeah, I've just bought in at like 2,800 satoshis or something, and now it's at 1,500. I'm like, fuck.
Cue the dump.
Yeah, but I think they missed one of their deadlines, and that caused a dump. But they've been active on their project for like a year, since its inception. And there's a big community around it. So that's one that's a masternode project that I'm involved in, and I think that's like $1 million market cap as well. There's a lot of opportunity in that space, definitely. As for other micro caps, one that I really like, and that seems to have held up well so far, touch wood, is Gridcoin, which is obviously an old proof of work coin from 2014. In the science sector, science and research, and that's been sitting between 350 to 400 satoshis for like the last 2 months. It's not really been affected by anything so far. So I think that's quite a good sign. It might obviously still continue to sort of bleed off, but it's had a very slow and not so volatile bleed compared to other micro caps in that sort of range. So that's one I'm bullish on.
So when you're going to get these micro caps, I know they're not readily available on major exchanges. What does the risk tolerance look like going on to some of these smaller exchanges? How are you setting up for proper security? What does that look like?
Yeah, see, that's one of my things as well, where I am so cautious of what exchanges I go on that that's another way that my list gets filtered down, because I won't go onto certain exchanges in order to buy coins. I tend to, in terms of the low liquidity, low market cap exchanges, I don't really go much further than TradeOgre and the only reason I went on to TradeOgre is because I had friends in the space who kind of not vouched for it, but said they had a good experience on it and have been using it for months.
Yeah, it's great.
So I've recently incorporated that. But other than that, like literally Cryptopia and Livecoin, they were like the only two, and Coin Exchange, but that exchange seems to have died off and there's not really much going on there. Mm-hmm. But those three were the three sort of low cap exchanges that I was on. And, they're not really low cap exchanges. They're kind of prominent. I don't tend to go for anything that's not been vetted by the community for a long time.
Fair. That's good, man. Well, so I know that as we wrap things up here, you've shared a lot of amazing content. I think that there's a ton of value that this will add to people. One of the questions that we always like to get answered, we ask everyone, we want to get a better understanding of why you're doing what you're doing. What's the motivating factor, the drive for you to continue in the space and to keep doing what you're doing on a day in, day out basis?
I think when I came back to the space in 2017, as I say in the book, I was like in my overdraft, having burnt through the money I made in 2014 and 15 on university living costs and that sort of stuff. So when I came back in 2017, I was like, right, this is somewhere that I know I can make money without actually having to get a shit part-time job. So that was the driving force. And then as the year went on and it was a great year, and then we got to 2018 and January was even more crazy. And I managed to claw back everything that I'd lost after the hack in October. So I was in a really good space in January and, cashed out a significant amount, not as much as everyone would like to, but a significant amount. And now it's kind of like, I'm still, the money motivation is gone because I have the security, and the motivation of writing the book, which was to educate as many people as I could with whatever little or large amount of knowledge that people think I have, whatever I could do to help. That was the point of the book. And now that's over as well. I'm still, for some reason, interested in the space, which tells me that I have a genuine passion for what it is and where it's going. And I think for me now, I've started the sort of website blog thing. I've not really been writing on there much recently, but that's something that I want to push and make an extension of the book where I'm constantly providing something that can help even just one person understand the market a little bit better and get to the position that I've been fortunate enough to get to. So I think that's kind of my driving factor at the moment. And it was very obvious to me that I wanted to remain in the space after I'd secured enough money for the next few years, and still was like, oh, I still want to be in the space. I still want to be doing things to do with crypto. That was the point where I was like, okay, maybe doing some sort of blog where you're providing free content that people can, read at their own leisure and hopefully get something out of. That was the idea behind that, and I'm going to push that definitely over the next sort of 6 to 12 months.
Awesome, man. Well, I know that there's probably one or two people listening that are creatives that maybe haven't made the leap, haven't taken the step. What's your words of encouragement or your advice that you would give to someone who has it inside of them but just struggles with getting that creativity out?
I think I share a similar level of sort of, for people who are creative, they often have a lot more ideas than they can physically get out, but that kind of is a form of paralysis where you then get no ideas out and you get no work done because you're like, well, I have so much to say in so many different areas, but oh shit, what am I supposed to begin with? Oh, have I prepared enough for it? The best advice I've ever gotten is just do it. Just start something. And once you've actually taken that difficult step to just begin, everything starts to snowball very quickly and you build some sort of routine, and then that routine becomes very difficult to break. Now I'm in the swing of things. I find it quite difficult not to be writing on a daily basis or not to be doing something creative on a daily basis because I've now been in this mode for over a year. Whereas before that, I was like, wait, I want to write this book, but I also want to do this. And I was just pushing everything off. And then I was like, you know what, I'll just write the first 300 words. And as soon as I did that, it's like, bam, you're through some sort of wall. And that's when everything starts to pick up the pace.
Nice. So what's next for you? Now that the market is getting to the point where it's at and we're at a bunch of uncertainty, you have your successful book. What do you have coming up?
I think for me, as I said, I want to definitely shape this blog a little bit and get as much out on there as I can. But over the past sort of 6 weeks, I've kind of been in a leisurely mode where I'm just kind of knocking off books from my reading list and stuff, that personal projects that I've wanted to do. And I think that will still continue over the next couple of months as I kind of decompress from the 9 months I spent writing the book, where I was focused on crypto for like 11 hours a day. So for me, it's like right now I'm kind of more sort of towards the side of, just do the things that you enjoy outside of crypto and then slowly get back into it into those sort of 10 to 11 hour days of working on crypto. But that is definitely something I want to push. I want to have it so that, sort of early next year, I'm putting out maybe six blog posts, lengthy blog posts a month. That would be great. In terms of personal things, I have like 250 books on my reading list that I need to start cracking through. So
you better get started, right?
Yeah, I mean, I'm like at the moment, because I have all the time in the world, I'm getting like 2 books a week nearly done. But it's just, there's so many that I want to read. But then I also don't want to keep spending the sort of 6 hours, 7 hours a day at the moment that I am reading. As sort of winter time comes and I think the reversal starts to come, those hours are going to get cut down because I'm going to want to be spending more time in crypto. I think it's just trying to find a balance, really. But right now I'm just enjoying myself.
Well, dude, I'll tell you, there's one book that I try to read it a couple times a year. It takes about an hour and a half to read. It's called The War of Art by Stephen Pressfield.
Oh yeah, that's on my list.
Yeah, it's phenomenal. Very fast read. But I think you'll really enjoy it. I think
I'll really enjoy that as well. I heard about that on Joe Rogan's podcast.
Yeah.
And I added that to my reading list because that sounds like my sort of thing.
Oh, that's a great podcast. That's one of my favorites myself. That and
yeah, it's great.
Have you heard of Aubrey Marcus?
Yeah, Aubrey's is great as well.
Yeah.
So, dude, obviously we want to make sure that everyone understands that your book, I mean, we're thankful that you've taken the 9 months to write the book that you did, because it's an invaluable resource. I think there's a lot of people in the space that if they haven't read it, they need to pick it up and start now. And, for those that don't know where to find it, we'd love for you to just fill us in. How can they find you? How can they get the book? Let us know.
Yeah, so you can find me on Twitter, just at CoinTraderNik. And the book is on Amazon. Whichever country that you're in will have some form of the book, whether it's the Kindle or the paperback edition. And I think there's some problems at the moment on the Crypto Emporium, which is my sole crypto-based distributor. I think they're migrating their servers and they've had some issues. But if you want to pay in crypto, that's one website that will take that. But Amazon is definitely the best place.
Awesome. So you heard it here first. Nik Patel has inked a partnership with Amazon, crypto style announcement right there. No, but Nik, honestly, thank you so much for coming on the show. Really,
it's all good, man. Thank you for having me.
And for those of you who are listening, we'd love for you to find us on iTunes, the Crypto Commission podcast. You can leave us a 5-star review and your comments. And also you can check out our Telegram. That's t.me/crypto_commission. It's been fun. Gentlemen, thank you so much for joining us, Nik. I hope you have an awesome day. Thanks, man.
Thank you.
Thanks, Nik.